Okay, resume recording. Ah, shucks. All right. Okay, we resume recording just in time, right? Well, when we start looking at the charts now. Okay. Yeah. So imagine why it's important to look at the higher time frame is on a small time frame like this, right? Like in the on the H4 chart, I might be thinking that, yeah, it looks like price is going up, is going up, is going up. It looks like it's going up quite nicely, right? So we naturally have a bias that, yeah, I'm going to buy here and maybe price is going to go up. But what we don't realize, right, why it's good to look at the higher time frame is that if you go one time frame higher, or maybe just go two time frame higher, right, you notice that where price is currently is at a major resistance. Price is testing this major resistance, right? The last time price was ever this high was 2 decades ago in 2002. Can you imagine that, right? Last time price was tested this level, it was in 2002 over here. So when price is now testing this level, right, suddenly it doesn't look that bullish, right? Even though there was a nice little climb over here, suddenly this looks a little bit scary, and we might be seeing price make a little bit of a reversal from here, right? So that's one of the reasons why what's the word for it? It's important to look at the higher time frame, because now when I look at this and I look at the price action that is happening over here, I get a different bias that I believe that price might actually be dropping, right? I should be looking at reversals, looking for opportunities to sell. Given that price is so high over here, it would be foolish for me to think that I can play it higher, right? But that is the danger, right? That is the danger of playing it higher, because on the smaller time frame, like I said on the H4 chart down here, let me just erase. How do I erase all my brushes? Yeah, so on the H4 chart, right? If you notice, right, this is exactly right. This major level over here was where price was testing, right? So this area here is not as safe as we had initially thought, right? We're thinking that it might go up, but the truth is, after it's testing a 20-year high, there's a higher chance that it will go down. So I will look for opportunities now to maybe sell and play a drop. For this analysis, right? For this analysis, let me share with you what is the strategy I'm looking at, right? I do notice that price seems to have broken this 23% Fibonacci retracement, right? And there's a little bit of a topish pattern over here, right? It looks a little bit like a double top or a cup and handle kind of movement, but what is for sure, right, is that there is a little bit of you can see price breaking this level over here, right? Multiple times it seems to be testing it over here, right? So there's a decent chance that it's going to drop. As much as I want to play it all the way down to here, right? As much as I want to play it all the way down to here, it would be a little bit foolish of me, because if you look at the Ichimoku cloud, right, there's a very strong cloud here, right? It's still above a pretty strong cloud around here. So I'm kind of limited by the downside I can play. Syed just said that the screen is not visible. Guys, can you see my screen? Are you guys able to see my screen? Yes, right? Yes, okay. Numan, it could be because you must maybe maximize it, right? Sometimes you need to toggle it. Oh, now it is visible. Okay. All right. So yeah, this is the look. This is the setup that I'm looking at. Oh, it's clearer now. Okay, good stuff, right? For some reason, it wasn't really showing just now, but I'm looking at this movement to play the drop. Okay. Now, when you're drawing Fibonacci, right, one of the things that when you draw a Fibonacci retracement, right, you notice that there's a 23%, there's a 38%, there are all these different numbers by the side. Okay, there are all these different numbers by the side. So what we try to look out for is that every time price breaks one number, it tends to go down to a next number. It breaks this number, it tends to go down to a next number. Breaks this number, it tends to go down to a next number. So it keeps going lower, lower, and lower. Okay, but if you're trading it by itself, it's a little bit dangerous. Okay, if you're trading it, it's dangerous to trade Fibonacci by itself. Now, what I mean by that is that it is dangerous just to look at Fibonacci over here, right? And just because 23% is broken, you play the move down to 38%, right? By itself, it's not going to be very effective. But what you can combine it with is in situations like this, where you can see that price broke this level, broke this overlap, right? So we got one reason, and you got two reasons why price might drop down, right? And now, of course, we have a 20-year high that is price is testing over here, a 20-year high, and that is why I have the bias that one of the moves that we can look to play down to is to the 38% down here. Okay, this is a short-term drop that we're looking to play the move down to here. Okay, in terms of stop loss placement, you can keep it really tight. You know, you can probably put your stop loss over here, right? And you know, if we get it right, we have a good 1:2, 1:3 risk to reward, right? If we get it wrong, we get it wrong fast, right? Don't need for us to wait that long to realize whether you're right or wrong. Okay, so this is one of the trades that we're looking at for dollar yen. Let's look at some other instruments, right? So the other one I'm looking at is Aussie dollar. Let me explain to you on Aussie dollar. Right? I'm going to remove the drawings. I'm going to hide the Ichimoku chart. Now, Aussie dollar, I always start off my analysis by going on the 1-day chart, right? One time frame higher, and I zoom out and I zoom out and zoom out, right? So when I zoom out all the way, I roughly know what is the overall trend. Is there any big picture that I'm missing, right? So what I'm noticing is that, okay, there is no big support that price could immediately come to. I mean, one support is down here. That is pretty far away, okay? You can do a Fibonacci retracement from here to here. And you'll say, okay, the next big support that price could come down to, maybe is over here, okay? Maybe it's over here. Why I don't consider 38%, and why I don't consider 23% is because price has already broke it, right? I have a starting point over here. I got an ending point over here, right? Price continues to go down. The moment it breaks this 23%, you can see, breaks this level, it becomes invalid, right? Then it comes down, it tests the 38%, it bounces, it tests the 38%, it bounces. But once it breaks the 38% over here, it becomes invalid. Okay, so that is how you apply Fibonacci, right? It's only not all levels are valid. Only the next level that is untested is valid. So we're looking at the one level down here, the 50% Fibonacci, which is not tested yet. Okay, I'm going to remove all my drawings again. Now back to this. Okay, back to this. So next big level we're looking at is here. What I like about this move, this particular chart, right? I'm going to pull it up for you. There is obviously bearish, right? We have a bearish Ichimoku here, right? Meaning that we got a little bit of downside momentum. But on top of that, we also have a sort of a bearish descending channel, right? Trend line pushing prices down, right? It could be, you could force out a sort of a channel from it, although I'm not the biggest fan of it, right? If you look at it carefully, there is a sort of, it's not the best channel, right? But there are 4 touches, right? There's 1 touch over here. There's 2 touches. There's 3 touches. There's 4 touches. But this is not really that nice channel, because channel should, the touches should begin when it starts to go down. So maybe I wouldn't really consider this a nice channel per se, but it's something to consider, right? Now, one of the key levels that we're looking at, right? One of the key levels that we're looking at is we're looking at the support level over here. There's clearly a support, right? There's clearly a support. Price bounce once, price bounce twice. Price is at that level. There's clearly a support level over there. So what can we expect from this support level, right? This is what I call a downside confirmation, right? Then I'm going to go into the 4-hour charts to zoom in into this technical setup, all right? Now, this is a support level, right? You can see price touch it once, it bounces up. Touch it twice, it bounces up. It's coming down to here again. Okay, it's coming down to here again. What do we expect from here? In fact, right, the idea is that if price breaks this level, if price closes, you notice that price didn't manage to close, below this level. So the moment price comes down and it closes, maybe it's a red candle and it closes below here, that's where you trigger the move down to your next target. Okay, I believe this target is in line with the 127, okay, which is slightly lower. That's fine, right? We just want to see how far price might go, but for sure, right, in this case, right, if price closes below this level, right, I would say, you know, it would trigger, in this case, right, it would trigger a sell entry, right, to for prices to come all the way down to this target level over here. Okay. In terms of stop loss placement, you must think about it. You know, the further you put your stop loss, is there a reason why you put your stop loss at a certain level, right? Some people want to put their stop loss over here. Okay. Imagine if they put your stop loss over here, right? If you put your stop loss over here, it is so far away, right? It is so far away, right? And it becomes not valid anymore. Okay. Now, I do realize I need to touch on one thing again, right? Because it wasn't there in the recording, right, guys? Just remember, I see some questions coming in that in this webinar, nothing in this webinar should be construed as investment or trading advice. All right, so please do your own due diligence before you guys trade. Okay, just wanted to recap on that because this wasn't in the recording earlier. Now back to our analysis. Okay, so when you put your stop loss over here, some people, right, when they place their stop loss, right, they put it very far away, right, and there is a price that you have to pay for having a further stop loss. What do I mean by that? Right, is that let me just show you. Okay, if this was our entry, right, so I got a short position. If this was my entry, this is my stop loss, right, and this is my take profit. One of the numbers we want to look at here is this, the risk to reward of 0.44. Okay, risk to reward of 0.44 is terrible. It means that for every $1 you for every 40 cents you gain, 44 cents you gain, you might lose $1. Okay. Now, look at, I want you to focus on this number, 0.44. Okay. The tighter, see, if your stop loss is very tight, you notice that you have a very, very good risk to reward, right? If imagine your top stop loss is super duper tight over here, right? You're only risking, like, your stop loss is over here, right? Look at that. You have a risk to reward of 11.81. That is great, right? So you can risk $1 and can make $11. Okay. However, right, let's just say you move your stop loss slightly further. As you move your stop loss further, you know, oops, not here. As you move your stop loss further, take a look at the risk reward. You notice that the further you move it, the lower your risk to reward amount, right? So there is a price that you're actually paying, right, just to have a further away stop loss. Many people think that stop loss, you know, they just put a random number, right? They take a trade. Okay, I got 100 pip stop loss, 100 pip take profit. That's it, right? They just put it at an arbitrary distance, right? But the problem with that is that you end up it's going to cost you, right? It's going to cost you in the form of risk to reward. It's going to cost you in the form of a profit factor, right? Meaning that your strategy is not as profitable as it could be. So what I always encourage people to do is that when you place a stop loss, in this case, when you place a stop loss, there must be a reason for where you're placing your stop loss. Okay. Oops, let me just highlight this. There must be a reason on where you're placing your stop loss. If you expect prices to break this level and trigger a drop, right? Then, you know, imagine this, right? If prices break this level and is dropping down, this is your idea, right? Price has broken this level. Imagine you're writing a story, right? You're writing an explanation, right? And maybe when you're writing the explanation, you're like, okay, why am I going short? Why am I selling? I'm selling because price break this level. Then after you write your explanation, then the next explanation you need to write is, where am I going to put your stop loss, right? Imagine if there's a police that is interrogating you, asking you, why do you put your stop loss over here? And you need to explain it to everyone, right? You must, if you want to put your stop loss over here, you need to explain why you put it over here. Oh, sorry, I zoomed it. Yeah, you need to explain why you put it over here. You put it here, you need to explain it. You put it here, you need to explain it, right? So imagine you put it over here. Then the people start to interrogate you, right? Say, okay, let's just say price comes down to here and it comes up to here. Okay, like price is now at this point over here. Why are you still in this trade? Do you really believe that price will come here, and then drop down to your take profit? Why do you put your stop loss so far? Imagine if you put your stop loss over here and price is now all the way up to here, right? Price is all the way up to here. Okay, Numan, I'm going to repeat this in a bit. Okay, imagine price is all the way up to here. You need to understand why your stop loss is so far. Do you put it so far because you expect prices to come all the way up to here and then maybe reverse back down? At every single point of time, with every single bar that is created, that as you know, as price goes on, you need to ask yourself, just why am I in this trade, right? Why am I still holding on to this trade? In this example, right? In this example over here, right? Why are you still holding on to this trade if price is over here? Why are you still holding on to this trade if price is over here? Okay, so you must you have to understand that your stop loss should be based on the idea that you have for your trade. Now, the idea that you have for your trade in this example, I'm just going to erase the drawings, right? The idea that you have for this trade is very simple. If price breaks this level, it should drop down to here. If it doesn't drop down and it comes back up, I want to know that I'm wrong very fast. Okay, if I'm wrong, I want it to be wrong. I want to be wrong fast. The last thing that we want, right, is that imagine you propose to a girl, you propose to your girlfriend, right, and you ask her, hey, do you want, will you marry me, right? And she says, I'll think about it, right? So that is the worst answer that someone can give you, right? You would rather her say no than to say, I think about it. Because when she said, I think about it, you're like, okay, so what do I do now? I'm in the land of, I don't even know what I'm supposed to do, right? Because you're in the land of indecision, correct? You either tell me yes and we go ahead with our marriage, or you tell me no and I know how to move on. The last thing I want is to be caught in the middle of nowhere, right? So in this case, right, if we are wrong, if price really doesn't drop here, I want prices to come up, it stop me out, and bam, I'm wrong, it's wrong. It's fine, right? So in this case, I'll keep my stop loss very tight. I'll keep my stop loss very tight over here, right? Oh, I saw nice little claps and hearts. Thank you very much, guys. Hey guys, if you can, I see quite a number of you guys over here. Please send messages in the chat room. Otherwise, it feels like I'm just talking to myself, right? It's very sad, right? I mean, if you guys are here, right? Yeah, it helps if you send messages and make sure it's addressed to everyone, right? So everyone can see the messages, right? It does help. Now, I say, so in this example, right, if I were to put my stop loss, I might even put my stop loss. Of course, I can't put my stop loss right here. As if I put my stop loss all the way here, it might be a little bit too tight, right? You don't give your trade the breathing space, right? Because your trade does need a little bit of breathing space. Sometimes it might go up and down a little bit, right? So you might want to give it that little bit of breathing space. Maybe I put it slightly higher about over here, right? Why I put it over here is because maybe prices come down, touch this level, and come here. Okay, I'm in the trade now. Once I'm in the trade, it might fluctuate up and down a bit, right? Before continuing to go down. When it fluctuates up and down a bit, as you can see over here, right? If I put my stop loss, right? If I put my stop loss too tight over here, I will get stopped out. So I need to give it just that little bit of breathing space, right? Before, to play the move down. Okay. Now, guys, again, if you want me to look at a particular instrument, right? Gold, silver, oil, Bitcoin, just let me know and I'll take a look at it. Okay, now one of the trades that I was looking at dollar yen, I hope it continues to drop. I'm in the dollar yen trade actually. Now, Kiwi dollar, same thing. So now one additional thing I'm going to teach you guys is correlation. Okay, correlation is when things move in together. Australian dollar, basically AUD USD, and Kiwi dollar NZD USD, they move in tandem with each other, meaning one go up, the other goes up, one goes down, the other goes down. So you can use this as if you have ever been faked out, right? If you ever have been, what I mean by this is if you have ever gotten stopped out of your trade, what's the word for it? The term is a false breakout, meaning you thought that the trade was breaking out, it didn't break out, right? And then you get, it goes back and hits your stop loss. If you've ever encountered that before, I'm going to teach you a secret way, a great way, right, to help you prevent yourself from being faked out, right, to have a fake breakout. And that is through the use of correlation. Okay, so the first thing you need to do is to find instruments that are very strongly positively correlated or negatively correlated with each other. The important thing is that it needs to be strong. What do I mean by that? Right. So in this case, Kiwi dollar. Let me show you. I'm just going to throw up a comparison chart over here. I'm going to have it on the same price scale. Now, what do you notice? I'm just going to hide the Ichimoku. What do you notice about Australian dollar and Kiwi dollar? Right? What do you notice? Right? They tend to move in tandem. Right? I'm just going to put this as a line. Right? They tend to move in tandem with each other. Right? One go up, the other go down. Right? So imagine, look at this. Right? They are really moving in tandem. Right? They just really, one goes down, the other goes down, one goes up, down. You know, they're almost like twins. They kind of go and they follow each other. Right. So that is so we know that if one goes down, the other goes down, one goes up, the other goes up. There's a high chance that that happens. Okay. Now, how can we use this information to our advantage? Right. Let me show it to you over here. There's this trick, right? So you can actually do this thing where I do AUD USD, you click new pane. So now we have AUD USD down here, right? I put it in the form, I double click it. I put it in the form of a chart. Right, so we got a chart over here. Remember our analysis, right? What analysis did we have for Australian dollar? We said that if price broke this level, it would drop, right? And we also highlighted a bearish little descending resistance, pushing prices lower, right? So we said that if price breaks this level, it will drop, right? As if price breaks this level over here, we will go short, right? We will sell from here. Now, as price goes lower and lower and lower, right? This is where when imagine Kiwi dollar comes down to here, Australian dollar comes down to here. Okay. Now, either one, there's no leading and there's no lagging currency. They both kind of move in lockstep tandem with each other. You know, they take one step forward, they move one step forward together, one step backwards, they take one step backwards together. Now, if the Kiwi dollar, if Kiwi dollar comes down to here, it closes over here, we might be tempted to sell because we think that prices is going down, right? We think that prices is going down. But at this point of time, right? At this point of time, if price for Australian dollar did not break this key level yet, all right? If price is just on this key level, right? So what you do is you draw a vertical line, right? And you put it over here, right? So you can see in this example for Kiwi dollar, right? Price has broke the key support level. So we think it's going to go down. But if you look at the Australian dollar, right? Price might not have broke it yet, right? Double click on this. You can see maybe price is still at the support level. But when you look at Kiwi dollar, it has already broke. So this is what I call, it's a warning sign, okay? It's a warning sign that something is not right, right? Something in the world is, you know, in the trading world is not right. You know, sometimes you have this, you know, if you've ever watched Spider-Man, you know, Spider-Man has this spidey sense, right? Or, you know, if you recently watched Star Wars, you know, watch Obi-Wan, right? I'm a big Star Wars fan. I watch it quite a lot, right? So, you know, they'll say, I sense a disturbance in the force, right? And they're like, something is not right, okay? So in such an example, this is exactly what happens, right? You sense a disturbance in the force, right? This guy over here is telling me that price is going to drop, right? You like Obi-Wan too? Yeah. Do you watch the season finale yesterday? Yeah, the season finale is out, right? So, you know, one currency pair is saying it's going to drop, but the other one hasn't broke the support level yet. So we know something is wrong. And in such a situation, when things are not lining up, we don't take the trade. Okay, we don't take the trade. And that's a great example of how you avoid getting faked out, because there's clearly a disturbance in the force. So, you know, we got to trust our instinct, trust what the correlation tells us whenever this happens. Okay, guys, right? This is just apply this to your trading, and you can already get a lot of improve the accuracy of your analysis of your trades. Okay, we will definitely reduce the number of times, right, where you will get faked out of a trade. Okay, now, so there is a in this example, of course, right, if both of them, right, in this case, if one had already broken out and the other had also broken out, like it's down here, right, then we have a high probability trading setup based on correlation, right? Because if they're both supposed to go up together, they're supposed to go down together. Both of them broke a key support level together. Both of them trigger a move down together. Then we know, okay, it looks like we're, we know that there's no disturbance in the force, right? It looks correct. Okay, guys, right? So that is a neat little trick that I want to teach you guys when it comes to trading. Okay, let's look at okay, where you can close out the correlation table. We're close out correlation table. Okay, dollar yen dropping quite nicely. The other one looking at is pound Aussie. Why am I looking at pound Aussie? I believe Propose trade doctor. What does proposed trick doctor? Sounds like a funky little thing, right? All right, guys. Now, one of the key instruments I'm looking at is pound Aussie, right? The reason why I'm looking at pound Aussie is for this reason, right? So on the 1-day chart on pound Aussie, I noticed that there is this big level of this big area of indecision. Indecision meaning that you can see price bounce up once, bounce up twice, 1 time drop, 2 times drop, 3 times drop, 4 times, 5 times drop, 6 times. It cannot break past this level. And it looks like a triple bottom pattern that is over here. Okay, it looks like a triple bottom pattern and I love it. The only problem is that price has not triggered the trade yet, right? The only problem is that price has not triggered the trade, meaning that we need prices to close above this level. We need price to close above this level to trigger the trade for us to play a bounce upwards. Okay, so in terms of Fibonacci, right, how high can it go, right? We believe that price, the moment it breaks this level, there's a good enough chance that it will come up to the 50% over here. So instead of playing to the 50% Fibonacci retracement, right, which is what a lot of people over time you might realize that you play it to a Fibonacci level. One of the key things you do is you need to fine tune it to what you see in the market, because if you go through our previous lesson, this is a very nice overlap resistance, right? Price bounce up once over here, went all the way down, it bounced up here, comes down. So this is a key overlap resistance for us to look at. Okay, if price close above this level, we can see a high chance that price might come up to here, right? So instead of playing it to the 50%, we play it just to the overlap, right? And that is enough for us to play a move up to there. Okay, guys, right? It's a very nice triple bottom formation. I really like it, right? So if it really is able to break out of there, I'm pretty bullish that it will come up to here. So this is one of the key moves I'm looking at in terms of stop loss placement, right? Where do we place the stop loss, right? So I'm going to put the 30 and 50 here. You might want to take a partial profit at the 38% Fibonacci retracement over here, right? So this would be partial profit. Okay, in terms of the stop loss, right? So remember when what I told you about proposing, right? If prices break out, it breaks out. We don't want to know whether we're right or wrong. You don't want to be left in the land of nowhere, right? So if prices really broke out, you don't need to put your stop loss so far away. Because unless imagine some people put their stop loss here, are you expecting prices to form 4 bottoms to trigger the move up, right? In this case, right, if price really, really breaks out, that's great. We keep a tight enough stop loss, give it that little bit of breathing space. Then, we let it hopefully take off and we make some good money over there. Okay. Now, so this is a nice setup I'm looking at, pound Aussie, right? So some of you guys might be wondering, all right, so how do I know which one it is correlated with, right? So this is where, you can go. This is where you can go to my FX book correlation table, right? I'm going to send this over to you guys, right? So in this example, you can click on, you look at GBP AUD, you scroll down by the side. Oh, here it is, GBP AUD, right? You click on it. And of course, the time frame, you'll probably change it to 1 month, a long enough time frame. And you see, okay, what is the top absolute correlation? There, Pound Aussie has a 84% correlation with Pound Kiwi. Anything that is below 80% is not worth looking at. All right. So all these things below is not worth looking at. Pound Aussie is still okay, Pound Kiwi. So that means, right? That means that I would then look at Pound Kiwi, right? And for Pound Kiwi, it's slightly trickier. I guess this is the level that you need to look out for. Let me just draw a Fibonacci retracement, come all the way down. Yes, it's a 50% retracement that we're looking at, right? So by the time Pound Kiwi closes above this level, right, we should expect Pound Aussie to also close above this level, right? So this resistance is related to Pound Kiwi resistance over here. You will notice that it's not always as nice as the Australian Aussie dollar, Kiwi dollar, where they're moving in tandem, right? And the levels are so clear, right? In this case, right, sometimes it's a little bit harder to find the pattern because Pound Kiwi and Pound Aussie are, after all, two different instruments, right? So in this case, I will wait for one way that you can increase the chances of you getting a profitable breakout trade is to look at the correlation between Pound Aussie and Pound Kiwi. Okay. Now, another one is Euro Aussie. I love Euro Aussie for this reason, right? Euro Aussie is at a pretty tricky setup. Honestly, Euro Aussie is a pretty tricky setup, as you can see over here, right? We can see, right? If you zoom out all the way, this resistance level, right? And this is the reason why I like it. It goes all the way back to here, right? This is a big resistance level that price had respected, bounce up once, bounce up twice, bounce up 3 times, bounce up 4 times, bounce up about a 5th time here, right? Finally broke this level, tested once, tested twice, and is back up to here, right? So this resistance level that price is testing is a big level. There's no two ways about it. It is definitely a big level. Okay, it's a big level that we're looking at, and there is a decent enough chance that price, we're looking at a big resistance area over here. Okay, looking at big resistance area over here, right? We are seeing that price has, look at the price action over here, right? There's very strong price action over here, right? So we could actually call a drop on this. Now, if you want to wait for a confirmation here, one good thing to do is you can draw this little ascending support, right? And then you will have this what we call a squeeze. Okay, what is the squeeze? Squeeze is like this, right? You have, price will be fluctuating in between here. As price gets squeezed, right, it will either break out down here or it will break out over here. But this is a key level for you to take note of, right? It's being squeezed. One of the reasons why I'm slightly worried about the, let me see, is because actually it doesn't respect the cloud that much. Maybe it does on the higher time frame. Nah, not that great on the higher time frame too. Right, let's go to the 1-day chart. Okay, yeah, this is the squeeze we're looking at. Okay, price clearly is not able to break beyond this 50% Fibonacci retracement. So I have a little bit of a bias. I have a little bit of a bias that price might drop from here, right? I have a feeling that if you want to play a scalping setup, not so much a scalping setup, you could play price a small little tiny drop to here, right? I'm a little bit concerned of playing a drop too far away, like all the way down to here, because of this ascending support line, right? So you actually could play a drop just maybe to here, would be enough. It's actually a good 100 pips, if I'm not wrong, right? Yeah, it's a good 100 pips that you could be playing for a quick drop to here. And then for your stop loss placement, you put it beyond this key level over here. Nice little risk reward setup that you could be looking at. Okay, right? So this is one of the moves they're looking for, Euro Aussie. Really, really nice setup too. Some of the other setups I'm looking at, Aussie CAD. Aussie CAD requires us, right? Aussie CAD requires us to break this key support level, right? What I like about Aussie CAD is that there is a nice, you look at this, right? There's a nice little bit of descending resistance, pushing prices lower, right? If you look at it in a different way, right, there is a little bit of a channel. Let me nudge it up a bit. Yeah, there's a little bit of a channel that you can see over there. So this is nice because of a few reasons, right? We got bearish Ichimoku cloud pushing prices lower, right? We got a nice channel that is pushing prices lower, but there is one problem. The main problem is this level over here. Price bounce up one time, bounce up two times, and is still testing that level. So we require price to break this key support level to trigger the move down to the next key support. Your question will be, where's the next key support? Simple, just draw a Fibonacci retracement from here all the way up to here. Okay, and we can see that the next key support is here. We can play a move down to this 61.8 retracement as the next key support, right? So I'm going to zoom in into the 1-day chart, and there we go, right? If price breaks this level, right, that means if price really, really closes below this level, right, we can then play a move. We can then play a move down to here, down to this nice little target down here. Okay, but it first requires this support level to be broken before, this support level to be broken before we can trigger a move lower. Okay, a really, really nice setup I'm looking at. That's an Aussie CAD. I think we have one on Aussie Franc too. Aussie Franc, I know it's a little bit messy. Aussie Franc is a little bit messy, right? But key structural setup, right? Same thing. You can see price bounce off one time, react one time, react two times, react three times, react four times, react 5 times over here, right? And it now looks like it has broken the level. If prices breaks this level, what I'm looking for is price to kind of retrace back to here. Then I'm going to short this all the way down to maybe even here, right? This could potentially be a very, very nice Hollywood setup, right? A really nice setup that could drop very nicely. But this is one of the key levels that I'm looking at. Okay. Next thing that I want to look at, and we're just highlighting things, different levels to you. Okay. I'm so excited to share so many different things to you, right? So Aussie Franc is in line with Kiwi Franc, right? You're both expecting prices to come up a bit, right? So in Kiwi Franc, same thing, seeing it here, we're waiting for prices to just come up to this level, pull back to this level, and then we take the trade to play it down again. Okay, this is a very nice setup with Kiwi Franc. As you can see, we're in a nice bearish, I'm going to even the weekly time frame. I can show you that we're in a nice bearish little channel, right? Prices is below the Ichimoku cloud. Prices has broke a key support level over here, right? The next key support level is a little bit further down. It's a little bit further down over here. So we could expect prices to just drop all the way down to there, right? On the daily time frame, this is what it looks like. I'm looking for the trade from here all the way down to here. Okay, it's a very, very nice setup, right? Price has broken this key level. I'm going to put a pending order here and looking to play the drop down. Okay. Let me see if I got any more sales, guys. I'm sharing so many things with you guys, right? Yes, this is this one already kind of worked out, right? This one, price has already broken this key, very, very nice support, right? You look at it 1 time, 2 times, 3 times, 4 times, broke out, bounce up once, bounce up twice, finally broke it, made the pullback. This would have been a great chance to take a trade. So if price comes back up to there again, that's great. I don't mind getting in again, because look, price has finally broke a Ichimoku cloud over here, right? Price has finally broke the key overlap resistance over here, right? And if we look at it in a different way, price has broke a nice little ascending support over here, right? And we should be expecting prices to drop quite nicely, right? We should be expecting prices to drop quite nicely from here all the way down to this level. Okay. Wow, it's been 15 minutes of us sharing, looking at the charts together. One thing I want to encourage you guys to do, right, is to actually head over to vip.ironfx.com, right? I'm not sure if you have an account already, but if you have an IronFX account, you're going to get a free access to it. Okay. head over to vip.ironfx.com because that is the place where you can get direct access to me, right? I think a couple of people got access already. The request management, right? I can see our good friend Natalia, who's already inside, like to gain access into the VIP room. I'm going to approve her. She's going to get access into it, right? Because in the VIP room, right, this is the place where you can come in here and you can ask me questions. You can ask me and my team questions. For example, right, we were short on dollar yen over here. You can say, hey Desmond, right? Hey Desmond, is this a good level to sell from? Right? What do? I highlight this level. I click on link object to text. Click on this line I just drew, and I confirm it. So when I send the message through, when you're reading the message, you're like, hey Desmond, is this a good level to sell from? When you hover your mouse over it, you can see it lights up. All right. So this gives us a better more context to the question that you're asking. So I'm better able to answer your question. I'm better able to give you, correct you when you do technical analysis. So I know whether you're doing right, I know whether you're doing it wrong. But this is special partnership we have with IronFX, where we're gonna, I think as long as you have an IronFX account now, you will get access to this. You will get all access to all the different indices, commodities, and Forex pairs that you can discuss. It'll be a nice place, right? Please go and get an account over there, right? I can see Inanga saying, I think I should offer webinars on how to acquire the right psychology and contact. Yeah, trading psychology, that's a good point, right? I believe we have a topic on trading psychology maybe in like 1 or 2 months' time, right? But I will be covering trading psychology for you guys because it is true, you need good knowledge on analysis and you need good trading psychology to become a good trader. You need a combination of both to be a good trader, yeah? But okay, guys, thank you very much for staying throughout this session with me, right? I hope you found today's session useful. Go sign up for next week's webinar session, right? I'll be able to see you guys there. I'll be teaching you guys top price action setups, okay? Otherwise, you can find me in the VIP room. I'm always in there as the chief trader, so you can ask me questions on technical analysis in there, and I'll do my best to answer you, okay? If no one has any more questions, thank you very much once again, guys, for attending today's session. Have a safe weekend. I will see you around, guys, right? Thank you, Inanga. Thank you, Vincent. You got Simon, Ishmael, a couple of other guys over here. Thank you very much. Stay safe, trade safe, and peace out, guys. All right. Stay safe, trade safe, and peace out. Okay. Adios, guys. Bye-bye. Yes, Vincent, you can talk about technical analysis in the VIP room. Okay. See you guys. Bye-bye.